Hey, what's going on, YouTube? My name is Usain Marquez, and thank you guys so much for tuning in to my channel, where I try to give you guys some good information regarding invoice factoring. So the reason I started this channel was really because I've been in the industry for 20 years, and I've seen firsthand how this product has served and benefited business owners time and time again. So I'm hoping that through the making of some of these videos, I'm able to go ahead and provide some good content, provide some good information for a business owner that may be on the fence about whether or not this product is right for their business, or maybe a business owner that's just trying to inquire. They've heard about what invoice factoring is, but they're not too sure what it is, and give them a forum here where they could go ahead and learn a little bit more about it. So lastly, if you guys don't mind liking the video, and please consider subscribing to the channel, as I'm really trying to expand this to really kind of be in a one-size-fits-all place for people to really come learn about what this form of finance is, not only to folks that are coming in as business owners trying to figure out what it is, but also to folks that are coming in into the profession. I know one of the things that I really do enjoy and really take pride in is being able to see those folks that are coming in and are kind of like deer in the headlights and not knowing what factoring is, how net terms work, and anything like that, and just kind of seeing them build organically to becoming some of the best relationship managers and account executives that I've seen in the industry. So please consider subscribing, and let's get into our first video. It's my first one, so I'm a little bit nervous. I might stumble a few times, but I promise you, if you guys stick with me here, you'll get more of my personality and you'll get some good content here that'll help you guys learn a little bit more about this product. So for our first video, what I want to do is, you could go ahead and Google what is factoring and how does it work. And we're going to take a really elementary surface look at how factoring works. But what I really want to do on this video is focus on how factoring provides more of an asset to your company by other than just the working capital side of it, right? Typically when people come looking for invoice factoring, 99.99999% of the times, what they're really looking to alleviate is the pain of not having sufficient working capital on them, right? Business owners got their invoice aging report. They're looking at it every day. They're beating their head and going, man, if I just had this money in right now, we wouldn't be struggling today. Payroll's coming up and we could really use these funds now, but here we are waiting for the normal course of business to go through, right? Net 15 days, net 30 days, net 45 days, net 60 days, even though you've already done the work. That bank account is drained from you having to do what you had to do to fulfill that order, right? So I want to go ahead and touch on that. We're going to touch on it briefly, but I want to talk about other things that are really hurting small business owners and how factoring as an entire product can really help alleviate some of those pains. So I pulled up two articles here, right, from Investopedia. One's from March 31st here, 2001, and the other one's actually from November of last year. So not that far between, kind of talking about the same stuff. So this first one here discusses a little bit about what the 4 most common reasons small businesses fail, right? And if we start here with the second paragraph, it says, while there's a number of small businesses in a broad range of industries that perform well and continuously are profitable, 20% of businesses fail in the first year, 50% go belly up after 5 years, and 33% make it to 10 years or longer, right? And that's according to the SBA. And it kind of goes into, a couple other things here, but here are the key takeaways from it. Now, if you're thinking about factoring, you probably initially only think that item 1 is the only thing that factoring can help you with, and it can't, my friends. It can't. Factoring can help you with all of these things, and if you stick around for this video, you're gonna see how. So let's take a look at some of these takeaways here, right? Running out of money is a small business's biggest risk. Owners often know what funds are needed for on a day-to-day basis, but they're unclear as to how much revenue is being generated, and disconnect can be disastrous, right? We have inexperience managing a business, or an unwillingness to delegate can negatively impact small businesses, as can poor visualized business plan, which can lead to ongoing problems once the firm is operational. And lastly here, poorly planned and executed marketing campaigns or lack of adequate marketing and publicity are among some of the issues that drag down small businesses, right? If we take a look at the other article that we got here, it's basically saying the exact same thing. The SBA defines a small business as one company with 500 employees or less. In 2019, the failure rate for startups was around 90%. Research concludes that 21% of startups fail in the first year, 30% in the second year, 50% in the 5th year, and 70% in the 10th year. According to business owners, the reason for failure includes money running out, being in the wrong market, a lack of research, bad partnerships, ineffective marketing, and not being an expert in the industry. Ways to avoid failing include setting goals, accurate research, loving the work, and not quitting. And again, forgive me, it's my first video, so I'm a little nervous here. I can't read. So let's just take a brief look at factoring on the surface. This is a real simple overview of what factoring is. I promise you, as we make more videos, we're going to drill down into each of these components. I'm talking about 10, 15-minute videos talking about each of these factors and how you can maximize the true benefit of this product, right? So if we look at factoring in essence is a very simple process by which a business sells an invoice to a factoring company at a discount, right? It's typically always business-to-business transactions for work that's been delivered and completed or for services that have been rendered, right? So if you're a staffing company, you have an employee that works security at an apartment building, they're finished with their shift, you invoice that apartment complex, the employee has worked, it's done, right? You invoice your customer, that's a factorable receivable, right? Let's say you have a transportation company, right? You pick up a load of goods, you deliver it somewhere, you drop that load, you hand that invoice, you hand that bill of lading, it is complete. That becomes a factorable receivable. So always remember, business-to-business transactions, right, for work that has been completed or services that have been rendered, right? So business sells an invoice to a factoring company at a discount. In return, the factor advances a portion of the invoice, right? And this can range sometimes. The standard advance rate is typically 80%. But depending on the industry, and we'll talk about that a little bit more in other videos, depending on the industry, those advances can be a little bit low, sometimes within 70 to 75%, depending on the industry, and sometimes as high as 95%. Again, depending on the industry. A safe number to really think about what your potential advance rate could be is 80%. So in return, a factor advances a portion of the invoice, typically between 80 to 95% of the invoice, and the factor waits for the payments to come from the customer when they're due in net 15, net 30, net 45-day terms, etc. So customer remits payment to the factor applies the payment and takes a discount fee and returns the remaining balance to the client, right? So we got an example on the right-hand side. Let's say you've got a $10,000 invoice. Don't be nervous, don't be scared, don't be frustrated. If you're a small business owner right now and you don't have an invoice for $5,000, I'm going to tell you why this product is amazing, especially if you're a startup. But let's say for the purpose of this argument, we're talking about a $10,000 invoice, right? Again, the work has been completed, the services have been rendered. So think about your business. Think about when it is that you are done with a job and you are able to invoice that invoice to your customer. That's when you can send it to your factor. So we take a $10,000 invoice and factor it, and we go ahead and we fund you $9,000. For the sake of this example, we'll use a 90% advance rate to make the numbers easy. $10,000 invoice that's factorable. The factor funds $9,000, 90% of working capital now. That's an injection of $9,000 immediately into your company. You're not waiting 30 days. You're not waiting 45 days. You're not waiting 60 days. It's $9,000 immediately injected into your business for day-to-day operations. The factor holds $1,000, which we call reserve, until the payment is received from the customer, right? So that's 10% of the $10,000. When the customer remits payments to the factor applies the payment. For this exercise, we'll use a 2% discount of $200, and they return back to the client $800. I'll briefly touch on the fee component of it, but we are definitely going to have a video regarding factoring fees, how to maximize those fees, how to get those fees as low as possible. But for the purposes of this example right here, at 2%, you're essentially paying $200 in order to get 90% of that invoice now for you to go ahead and run your business on a day-to-day basis over the next 30, 45, 60 days and get the remaining $800 once that payment comes in. There is an amazing opportunity for you to factor your receivables and pay less than the 2% that you just got. I'll give you an idea real quick. You could easily take that $9,000, look at your accounts payable, see who you owe money to in 30, 60, 90 days. And if you look at your receivables, the invoices that you're billed, you're going to notice that a lot of customers will tell you, hey man, you could take a 2% discount if you send me the money now or in the next 10 days. So what I encourage a lot of clients to do, or a lot of folks that get into factoring, is, hey, start using this product correctly, right? Take that $9,000, take a look at your receipt, take a look at your payables, and who you can go ahead and get a discount from by paying them early. Now you've just taken a 2% discount on that, and you've offset the cost of factoring. But that's factoring on the surface, right? And that alleviates a component of it of working capital. But what I really want to touch on real quick is let's go back to some of these other things that are really hurting small businesses, right? So if we look here, boom, 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 boom. Let's take a look here. I think it's in the other article, right? So if we take a look here at the other article, right? We're seeing here that inexperience managing a business, an unwillingness to delegate. So I know an accountant, right? And this accountant has clients. And for some apparent reason, over the last year or so, he's been kind of doing the books for all these different types of businesses. And he noticed that his best clients were all in the transportation. They were returning a nice yield, right? And he was noticing this common theme. These were businesses that didn't know each other. They weren't in the same town. They weren't, these are just his clients. And he noticed that when he categorized them by industry, these transportation guys were doing really, really well in 2020. So what this guy decided to do, he had a little bit of cash laying around. He went and started a transportation company. Now, here's a business owner that is not in the industry. He's got no knowledge of the industry other than the numbers that he helps reconcile for his clients on a monthly basis. Yet he went ahead and bought a truck and said, hey, I'm going to start learning this, right? I want to talk about the back office administration part of factoring, because that 2% that you paid in that example right there is not 2% for access to the working capital. Understand that the back office support of factoring really becomes an extension of your back office. You might not have a back office. You might be a small business owner where it's just you. It might just be you and your wife, and you're juggling all these tasks, trying to grow your business. You're trying to learn how to do sales. You're trying to learn how to bill. You're trying to learn how to collect, and you're also waiting for cash. Factoring provides you with the relief of not just giving you working capital, but also providing you with that back office support, because most factors are going to dedicate a relationship manager and an account executive to be the person that deals with you on a day-to-day basis. That means every time you submit an invoice for factoring, you've got that one person in your team on the factoring side that's there for you to get it uploaded, to reach out to accounts payable on your customer's end and make sure that they have everything they need so that invoice doesn't get delayed. I can't tell you how many times in all of my years factoring, I have seen invoices that are due in net 30 days and are paying at 40 days. They're paying at 45 days before they came to factoring for no other reason other than the business owner just forgot to put in that purchase order, or the business owner forgot to put the signed bill of lading with the invoice. Little miscellaneous stuff, but that can get to accounts payable, and accounts payable goes, this isn't complete. It's going out on the next batch of payments. And that could be 15 days, 20 days later. Sometimes they pay within 30-day cycles. Factoring's back office support eliminates that process for you, because our job as a factor is to make sure that accounts payable has that invoice before we're able to fund you. So there's a key component in there that's a true asset to your company when you send in your invoices, and the factoring company, your account executive or your relationship manager, begins to build that rapport and relationship with your customer's account payable department. They get to know each other. They get on the same page with how often you invoice your customer. She gets a true understanding. The account executive gets a true understanding at the tendencies of that particular customer's payment terms, when they release payments. That person is there for you to become an extension of your growing business. So factoring now has provided you with working capital. The factor has provided you with a back office support, whether you're starting out, can begin the genesis of that back office extension, or maybe you're a business that's already got a back office flow and a back office routine. That factor is now going to become a part of it. You already know your customer. You already know who to get a hold of at accounts payable. You already know the tendencies of accounts of how often and how quickly they pay. The factoring account executive is just coming in to be an additional set of hands, right? The other thing that a factor provides you with is credit management. You might be a business that when you first started off, you're growing your company organically and you're doing work for somebody and you're handing them a bill and they're paying you. And that's great. You're doing another job, you're handing them a bill and they're paying you. And that's great. But as your company begins to grow, your name gets to get out there, right? You're going to get bigger jobs. Now, what comes with bigger jobs? The normal course of business. They're going to call you, they're going to place an order, you're going to get excited, but they're not going to pay you once you're done with the job or once the services are rendered. They're going to pay you 30 days afterwards, 45 days afterwards, 60 days afterwards. And that can provide that cash flow crunch. And you've got to make a decision and go, how do I survive these 30 days? There's the working capital side. But more importantly, how do you know that that customer that is asking you for credit is credit worthy? See, here's the thing about factoring. Factoring isn't making a decision to fund you necessarily based off of your financials, your credit history, but really putting an emphasis on your customer's credit history, your customer's ability to pay. That's why when you first come across this issue of going, what do I do when I've got invoices that are due in 15, 30, 45 days, and I don't want to say no to these orders, and you run to the bank and you try to get that line of credit, and the bank says, hey, right now you don't qualify for traditional bank financing, you have an alternative in factoring. Use factoring as a tool to incubate you for a year or two till you get those financials strong, till you become all the things that the bank needs you to be in order to get that traditional line of credit, to get that traditional loan. Just because the bank says no to you at first doesn't mean that you have to give up. Doesn't mean that you need to continue to struggle not knowing how you're going to meet payroll. Doesn't mean that you have to say no to that order that just called. Doesn't need to continue to add stress. Factoring provides credit monitoring. So when you're asking whether or not you should do a job for a new customer, you call your factor first. Hey, Hussein, I just got a call from these guys. They want to order $40,000 worth of work. What's their credit like? I'm going to go ahead and pull that credit and I'm going to call you back and I'm going to say, hey, these guys are strong. I'm comfortable factoring it. Or I might tell you, hey, I'm not comfortable factoring it. I'm not going to tell you what to do as a business owner, but I'm not comfortable extending 30, 60 days and factoring that receivable. Now, you might very well still say yeah to that deal, but at least now you know you've got a credit manager, you've got a back office administration support team, and you've got working capital. That's what you're paying for. That's what you're getting in a nutshell when you're factoring. So when we look at factoring again, we could take a look at this and we can go, wait a minute, maybe I don't have experience managing a business. I know my trade, I know how to do my job, and I know I've busted my butt here to start this business, but I don't know how to be a boss yet. I don't know how to delegate stuff. The factor helps you with that, right? An unwillingness to delegate can negatively impact your small business as a poorly visualized business plan, which can lead to ongoing problems once the firm is operational. Here's another one: poorly planned, executed marketing campaigns. Look, you know your business better than I do, right? What I'm trying to offer you as a factor, or what a factoring company is trying to offer you as a factor, is the ability to free up, no problems with the cash flow, free up the ability to know you have a support staff that's making sure that your invoices are being billed correctly, that your invoices are being collected in a timely manner. Factors are not collection agencies. We act no different than if we worked in your back office and you walked in with an aging report and you said, hey, Hussein, these invoices are due in the next 5 days. Can you call a couple of these customers just to make sure that those checks are ready to go for next week because we really need the cash? So factoring, again, provides you with the working capital. Factoring provides you with a credit department to know whether or not the customer is ultimately a good customer in order for you to accept extending terms to them of 30, 45, 60 days, right? The back office administration support, which handles billing and collecting. You've got essentially a team behind your company, not just a cash flow, that's going to be able to free up time for you to do what you do best, which is run your business, sit down, and clearly think about, hey, how do I market my business? How do I increase sales in my business? As opposed to running to the mailbox every day, hoping that there's a check there because you've got payroll to meet in the next week or so, or you haven't been able to buy that new piece of inventory and you really, really need it, right? Factoring frees all of that up so you as a business owner can sit down and concentrate on growing your business. So that's what I really wanted to talk about in this first video, is really just how factoring can really be used, not just from relieving the working capital strain that a lot of businesses fail, but also the support of having a team behind you that's looking out for you regarding making sure your invoices are billed correctly, making sure timely collection calls are being made on those receivables, building a relationship with those account payable departments. I can't tell you, we're all humans, guys, right? If things are getting a little bit tight and not too many checks can go out, you know who's going to go to the front of the line? The account executive who has a relationship with your customer, who's always asking about little Timmy's T-ball game, and they have a good relationship with each other. That's just the way it works sometimes, right? Let's just be real here. So guys, you're getting a full service product, and I truly think that that's not spoken about a lot when we're talking about factoring. We're always talking about the advance rate, and we're always talking about the working capital side, but we're really not talking about this back office support. So you've got to be honest with yourself today. When you're looking at your aging report and you're going, man, I'm liking what this Hussein guy is saying regarding the working capital, but geez, I never really thought about, the addition, to the team, having a credit manager, having somebody that's really making, that's trained how to make good, proper, well-mannered collection calls, making sure that accounts payable has everything that they need. That's a key component to growing your business. It's literally mentioned here that it's not just working capital. It's not just running out of money that can really hurt small businesses. To my banking colleagues, you have clients coming in every day asking you for business loans, asking you for lines of credit, and they're startups. They're new. They might not even be startups, but for whatever reason, they don't qualify for traditional bank financing. Please consider invoice factoring as a means to an end. Use factoring as an incubator to get them to traditional bank financing. Your banking relationship does not change. Factoring companies are not banks necessarily with depository accounts. These are standalone factoring companies. Your banking relationship stays. So as a business banker, there's no risk to you saying, hey, you don't qualify right now for a line of credit, but you know what? Let me introduce you to a colleague of mine who's in the factoring industry. I see that you've got good receivables here. Let me get it to him. Let me see what he thinks, and let's see if maybe we can build you up and get you to where you need to get through the means of factoring, and revisit this in a year, revisit this in 2 years, and then be able to offer you that bank financing that you want. So I hope you guys have gotten a little bit of what I was trying to explain in this video about how factoring is a little bit more than just getting that working capital, but there's a service component to it. There's a teamwork component to it. And again, guys, we're going to go into videos talking about how to choose a proper factor and how to make it accommodate to your business style, how you run your business. You might be a mom and pop business. You're looking for a mom and pop type factor. You might be an amazing machine that's just needing to free up the cash flow, and you've got this routine in place, and you're just looking for the additional hands at such a low cost, because when you're considering what you're getting on the discount rate, all the services that you're getting on top of the money, you might say, hey, factoring's for me as well, right? I hope you guys have enjoyed this video. I'm a little bit nervous. I hope you guys tune in. Again, if you guys like the video, man, let me get a thumbs up on it. And again, please consider subscribing to this video, because I'm going to try to put these out on a daily basis, touching everything from factoring to, again, folks that are entering the industry. So you might be a factoring company out there that just doesn't have the time to really start training your staff. I hope you guys find it, useful to come onto the channel and see some of the stuff that we're going to do regarding, training account executives, teaching them how to properly verify, how to properly do collection calls and stuff like that. So guys, again, this was my first video. I hope you guys enjoyed it. It's been a blast doing it for you guys. Again, this is my way of just kind of giving back to an industry that I don't think is talked about enough, that I truly, truly love and believe in the product wholeheartedly. Till next time, thank you guys for tuning in. I'll see you around.